Good afternoon, everyone. Hope you can hear me okay. This is Chris Brecher, usually in the Chart Patterns Mastery or Central Room. I've been in the Central Room almost as much. Today, all about talking about the advanced decline. I got to tell you right now, I hear some other people say they never use this, they never use that. I'll use whatever works. So just keep that in mind in here. And now that I'm dual broadcasting, Thinkorswim is crashing. So give me a second. Sometimes the dual bandwidth gets to you, so just give me a second. All right, let's see if this will work. Now, I'm not sure this will work, but we'll try. So let me show you what we're talking about. My pointer just stopped working in here. So this is what I want to show you. So ask anybody, whether it's the Essentials Room, whether it's Chart Patterns Mastery, whether it's Central Room, about our track record with the SPX or the XSP for 0 DTE. And I don't think anybody beats me. So the whole point in there is we use different things. So if one time the advanced decline works, great. If we see bear flags and things, great. Like now, you see the advanced decline going down, but you see the NASDAQ and the Amazons, all of them going up, and the JP Morgans. So it doesn't work right now, but it worked earlier. That's the whole key, is when to use it. And when we use it is when you see a big old divergence. Now, I know that it's usually the SPX is centralized in just a few stocks, and that's fine. I understand that, but it's still 500 stocks. And if you see the advanced decline act really poor later in the day, it has a habit of the SPX just doing nothing, being blah. That's all we want, blah. So let me show you what we're talking about in here. I'll see if I can do it. So number one, like I said, we combine the bonds, we combine like the financials, and we'll combine the advanced decline. So nothing do I ever say never. So just to let you know, I'm always looking at what is the criteria. Like now, look at the financials go. So heck yeah, why should the markets go down? So you always combine it with multiple factors. So just keep that in mind in there. That's what we're doing. So let me check one thing. So just keep that in mind. So let me show you what we're talking about this morning. So this morning we were talking about this. So like I said, you got to have a holistic approach and look at everything. But there are times, and I'll show you. All right, this morning, when the S&P looked like it was going to fall out of bed, or the SPX for that matter, we can use the SPX, and we'll use that on a 2-minute chart. Then on the right, I want to show you the advanced decline on a 2-minute chart. As you see, this got like a dose of Viagra in here. The key was that when this was going down back here, so when this was going down right here, but the advanced decline was doing that, that usually means you don't go and short it. So keep that in mind. Doesn't mean you have to buy it, but that's a big warning sign not to go and buy puts. So that's number one. Number two in here is, while that was rallying, we use a 6 grid or a 4 grid for our day trading. So you're watching that. And then you're going to a 4 grid of the futures. So that corresponded to this. We use on a day trading basis, we use an hourly, a 15-minute, a 5, and a 1. And what you're going to notice is when the advanced decline was going up right here, this was oversold. So now you have 2 reasons. You have the advanced decline going up, and you have the oversold reading. You could use it on the non-24-hour SPX. You'll see it. So you're going to see this on a 15-minute chart. You're going to see the SPX was oversold. And guess what? The advanced decline was rallying. So you have more than one reason not to buy puts. So everybody's like, oh, the market's going to crack. No, you got to look at the holistic approach. I can't impress that enough. So when you're oversold and you have the internals improving, you don't screw around on the downside. Now, on the other hand, let me take this from Friday. So here's the SPX on Friday at the end of the day, not today, at the end of the day, Friday. And you'll see this. See that right here. See that sell off right in here. So you see the sell off here. Now on the right, look at the advanced decline. And what you're going to notice in here, I'll put it on a 1 minute and we'll do it for Friday. And that's what you're going to notice on Friday. It fell off a cliff. Fell off a cliff. Look at that. So the whole idea is while this was futzing around in this zone, this is the SPX on Friday. When it was futzing around in this zone, this was falling apart, which meant to me that the markets weren't going to have a massive rally. And it works. As you see, it worked perfect. So that's why we played something around 61.10. In fact, somebody in our room had bought a 30 wide SPX butterfly at 11, and it closed almost at 30. That was pretty cool. But getting back to it in here is internals do matter, especially for 0 DTE. So, I mean, that's how we look at it as long as you combine it with other criteria. So, and that's been working in the long run. You know, I've been doing it 45 years. I'll use whatever's working. But if I see that kind of thing on the right, and I see that divergence where that's going straight up, look at this on the left. See on how that went straight up at 10 a.m. Right here, 10 a.m. I'm putting this on the right. See that horizontal line? Then on the left, what do you notice at 10 a.m.? You're going to notice that it went up. Now, I'm not saying a lot, but what I am saying is you just couldn't buy out of the money puts when the internals are improving that much. That's what it means. Do you have to buy out of the money calls? No, but you definitely don't want to buy out of the money puts in that case. So there's a time and a place to do that. Now, this is where it gets interesting. I bet you just thought the market was going to zoom to the upside. Zoom to the upside. Remember, I'm combining it with more than one factor. So I never use never like I never use an indicator. Like I'll use the squeeze at times. You know, I'll use other things. What do you notice? You had this rally just now while I'm on, and this wouldn't bounce. The internals refused to go higher. Not even an uptick. No uptick whatsoever. That made me more inclined that this was going down, which is exactly what worked because the internals never improved. I don't care what anybody says about, oh, the Mag 7. Just keep in mind the ES or the SPX, for that matter, is 500 stocks. So if the internals are this bad, or let's put it this way, they don't even bounce. So it's an art, not a science. This didn't bounce. This went up about 15 points, 7 points. That meant to me that this was going to sell off. So just keep that in mind. Now, if I saw this, now keep in mind it's still up for the day. Still up. But if I see this negative and this form a bear flag, that's a whole different situation. We just don't have that yet. So I just want to make that clear. So that's what we're watching with this stuff. And that's and it works. And like I said, there isn't a magic bullet, but I will never say never. I'll use the squeeze if I use it a result in the scan. So I'll use a Fibonacci if I have to. I'll use a moving average if I have to. But what we're talking about today is the advanced decline. Now, the other thing you might ask, well, how about the internals of all the NASDAQ stocks, not the New York stocks? This is not the NASDAQ 100. What do you notice? The same thing. On the left is the NASDAQ. On the right is not the NASDAQ 100. The futures are the NASDAQ 100. This is all the NASDAQ. And look how the internals refuse to even have a bounce. If this is going to go to a higher high from an hour ago, then this should at least have a bounce. I mean, it didn't even have a bounce. So that's why you don't buy calls then. That's the whole point. It's all about probability. If you trade 0 DTE, you don't screw around buying out of the money premium if the internals are deteriorating. It's all about probability. And the probability is you're going to lose buying out of the money call premium when the internals are this weak. So, or let's say refuse to bounce. So just to let you know, when I was on the floor, how did this work? What happened when I was on the floor is because I was on the floor for 8 years, including when they started the SPX. So a lot of times traders would buy the futures, figuring it would pump up overall stocks. So they'd pump up the futures, thinking the stocks would follow, the arbitrage. You buy this, then they have to buy stocks. But the stocks kept going down, so they have to scramble and sell the futures. And which is exactly what you're seeing right now. If the internals are this bad, it means the probability of you making money on 0 DTE calls goes down dramatically. In fact, if you're buying 0 DTE calls and you don't have a defined tight bullish pattern, which you don't, then you don't touch them. The whole point is the probability. And the probability is it wasn't going to work. So the other thing, and if you're new, you know that this has worked a lot. The higher the commodity index goes, the lower the bond market goes. So if you see the bond market getting hit because the commodities are going straight up and the internals are going down, then the probability is you're going down. So just keep that in mind in here. Now, the financials look okay, no doubt. And that's holding up everything. You always have to know what to look at. That's why I have a lot of things up. That's why I have the financials up here. I have the chips. So, and like I said, you don't know it's going to bounce. If the internals improve dramatically, it's all about dramatic. If you see the bonds rally, and you see the advanced decline do that, then you look for a positive reversal pattern in the ESs, which is what you got back here. You got an inverse head and shoulders right here. Not a big one, but the point was not that it's going to bounce and you play the bounce. It's that you don't play the short when it's oversold and the internals are improving. That's the whole point. Everybody thinks that you have to buy or you have to sell. No, it's all about probability. And if this is doing this and this is doing this, then you don't short. So especially when the ES on a 15-minute chart was already oversold. Now, on the other hand, watching the internal, and it's bad. Yeah, I mean, exactly. In fact, I could show you that right now. So when you see the markets rallying and the bond market on the low and the commodities on the high, and you're seeing the ES rally temporarily, but the internals are bad, yeah, you could sell out of the money premium. Sure enough, because you don't have any type pattern. So right here, it went up. You can't just blindly short because you could have done it here. You had that blip. You have to sell it here. You have to sell on the cross. This still isn't a big move. Now, if the financials acted like dirt, I would be more aggressive. But I bet right here, if we put up the SPX, and you put up the SPX in this zone, and you see those internals look like this, I bet you right in here, let's say 1 o'clock. And I bet if you put in the SPX 6150 calls, wow, they're too far away. Let's say 6140 calls. And you go put this over here. Yeah, that's what you're going to see. You're going to see that at 1 o'clock, these went, and not a lot, but they went from 50 cents to 20 cents. They lost 50% of their value because the momentum wasn't there. If you're buying premium, you better have the momentum on your side because of the time decay. So as you see, I mean, it worked. But what's interesting, because it went down so slow, I'm not sure you would have made money in puts either. So let's take the 6,100 puts. Yeah, that's what I was telling you. Look at that. So the calls went down 50%. The puts went up 10 cents because it's slow, because you got to combine other things. Number one, keep in mind the advanced decline is still positive. That's a big deal. If the advanced decline went this way and was negative, it has a habit of making the SPX go down faster. So it's a push. So that's where we are right now. What do I think for later? Well, heck, I think if the bonds can't rally because the commodities are going bonkers, then I think this is probably selling off at the end of the day. But this is a big but. You better have those financials run out of gas. You're not. The credit cards, the banks are not running out of gas. The chips aren't running out of gas. The Caterpillar isn't running out of gas, no pun intended. And obviously Tesla is running out of gas because it uses electricity. But the key in here is still there are a lot of groups acting well. And because of that, it's going to be extremely difficult for this to get pounded too much. But as you see, it's worked. So I don't know whoever talks about the advanced decline, they never look at it. I don't know about you, but it sure looks like it worked to me. So now you might ask, can you chart the advanced decline? Well, in hindsight, it looks that way, but no, it's more the slope. So when the slope was going straight up here, but the SPX was going straight down, that was a tell that this was going to hold support. That's what I'm telling you. You combine support, you combine groups, and you see what's going on now. Yeah, right in front of you, it worked perfect. So 007, if you see the bonds down, let's say out of nowhere, they're down 105. Yeah, I'd look to buy out of the money, put premium on a real dive. I don't see it right now, but that's, yeah. I mean, there's a time and a place to play it. So in there. So just to let you know. So getting back to it, what do you know? What is your criteria right now? Your criteria is the internals are weakening. They're still positive though. I can keep that in mind. They're still positive, but the internals are weakening. The SPX is weakening, the bonds are weakening, and the Dow Jones Commodity Index is on the high. In fact, it's on the high for the year, and it's testing the high from 2022. Look at that. So all these Fed people that say there's no inflation are full of it. Excuse me, Mr. Powell, but they're full of it. You go to the store, corn, everything, going nuts. So I don't know where they're talking about that there's no inflation. So that brings me to the next thing, the bond market. So if inflation's going up, why do they say that? I think it's political. I have no idea why. I think it insults our intelligence to say there's no inflation, that inflation's almost conquered. That's bull crap. So the way I'm looking at it is this doing this. Now, the basket of inflation stuff they have in there, like TV sets. Yeah, like you buy a TV set every week at the grocery store. Yeah. But getting back to it, if I'm right with that breaking up, that's a weekly chart. That's like the bond market going all the way back to here. The bond market does that. Well, let's just put it this way. The advanced decline is going to work as a better tell if the bonds are down 26. Look what's happened right when I was on. So that's why you pay me the big money. Advanced decline internals, bad. Advanced declines, like I said, by the advanced decline, and the bonds down, led by the Dow Jones commodity going up, then the probability is the markets were going to go down, not up, which is exactly what happened. That's a beautiful thing. So I hope that helped you in there. So bonds down, advanced declines weakening, means the ES is more likely to fail at resistance, which means exactly what you're saying, 007, that you could sell out of the money calls. Now, if you see a lot of things selling off, and let me put this in, hope it doesn't blow up the computer again. Yeah, now chart patterns mastery, you know what we're in. We're short Apple. So just keep that in mind in there. And I might get back in Visa. So just to let you know. So good one in Apple. So in fact, let's see what you're up in it. Well, you're up. So we'll just leave it at that. But you see the internals are still positive. Don't get me wrong. Not by much. But it meant to not buy call premium. That's the whole point. So in fact, Gino, if you go into FinViz, go look at the commodities, and I have no idea what Powell's smoking. When you go into futures and you go to grains, I mean, geez, that's pretty impressive. So the corn, the wheat, pretty impressive. So how about the softs? Well, you got the coffee going up, the lumber going up, the sugar going up. Orange juice has a problem with their sugar, and, a lot of people anti-sugar. But I'm just telling you, what you buy, like coffee and sugar and corn and wheat, yeah, I have no idea how they say there's no inflation. So maybe gold's up, silver's up. I don't know. So like I said, I think a lot more of it is political than you want to admit. So just keep that in mind. And the other, like I said, the lower the bonds go because of DJCI. So let me just put it this way. When I was in the pits, we'd be watching corn, wheat, and all that for a tell of what the bonds are going to do. So, I mean, that's your stimulus. So just keep that in mind in there. That's your stimulus at the moment. And that's what we're watching. So just keep that in mind. So everything else, though, financials going back up. I don't see the reason to buy put premium. That's all. So it doesn't mean you're not going down later. That's a lot of double negatives. And I'll show you why. Watch that advanced decline on any little oversold bounce right here. And then watch, though, the hourly chart of the ES. I don't know about you, but that sure looks like a bear flag to me. Now, why isn't it breaking? It's not breaking because of this. It's not breaking because it's already oversold. So in the next hour or two, if this gets back to zero and this retains that bearish structure, then I think this is going all the way to here, down about 20 or 30 points. Most of the sell-offs we've had have had massive reversal candles. I mean, most of the rallies. So you have this sell-off that becomes like just a wild sell-off with a green candle to take it back. Every one. Until now. So it's all about how you work that off. Plus, I'll be watching the bonds. Plus, I'll be watching the commodities. So just keep that in mind, and the advanced declines. Now, you might say, well, why aren't we watching the advanced declines of the NASDAQ? Well, I am. Well, of the over-the-counter stocks. You have it right here. So we have the ADD and we have the ADQD. Just keep that in mind. If you want to know how to get to them, go to indicators, public indicators. And you'll see you got the composite of the New York Stock Exchange advanced decline. You have put call ratio, which we use, but you got to use it later in the day. You got the ADID, the Dow Jones Industrial Average advanced decline. Well, it's only 30 stocks. It's not that hard to figure out. But you can go through here and you'll find them. So NYSE advanced declines. There's all kinds of ones in here, advanced declines. So I use the ADQD. You can use the NASDAQ 100, by the way. For a lot of you that don't believe in the advanced declines and think the Mag 7 moves everything, sure, you could use the ADND. ADNDD. Let's put that in here. And we can use that instead. I'm going to forget what the name of it is again. Darn it. There. What's this telling you? Now the opposite. Look at that. So this is on the low and that started going up. So I don't know about that. But what's this telling me? It's telling me that you can't buy out of the money put premium. This should have been on its low if the NASDAQ's on its low. So the NASDAQ 100 internals aren't bad. So net 35. So they're like 65 up and 35 down. I mean, yeah, however you add it. So that's not bad, which means I'm not buying out of the money put premium. That's the whole point. I'm not buying out of the money put premium. It's not the right day. So just keep that in mind. Like I said, I like ADD, I like ADQD, and I don't mind using the NASDAQ 100. So I don't mind using all three, but keep in mind, I have up 20 charts for everybody at all times. So you can see the big ones. And you see they're not really going down much. And that's why I'm not wildly bearish, but I'm not buying out of the money call premium. So I'm just telling you, we have a really good track record with our 0 DTE. And I think you've experienced some pain of watching some of the other 0 DTE sites. And so just keep that in mind. Now you might ask, okay, what are you going to do the rest of the day? Well, the problem is the market's really slow. So the expected move is really low for today. So I don't have the trade on the close. Theoretically, I'd play the 613, 611, 609. but it's so slow, I'm not going to do it. So I just want you to know what I'm looking at. So I hope you find this insightful. Have a great